whatever we are going to do. And then, um, yeah, so today we are going to look at a quick overview and analysis, analyze some few pairs, for example, gold. We will look at Euro USD and also look at volatility 31s, 51s, and maybe 75 and 50 index. That is from my side, except if Oliver or Coyote or any other has any other setup or view of any pair that you want to share quickly with us, then you might want to tell us what we should look at. So, are we good? So let's, I don't know who else is going to join, but we should get started. Right. So for today, um, before we go into the charts, I want, I want to say that if people join, like people who don't have anything about, who don't know anything about trading, they don't even have a broker account opened, then they are going to get lost a little bit. But I don't think they should get lost. God willing, Saturday, we are going to continue the 8 week weekend intensive training for beginners, and they will learn what it takes to get started with Forex. So for us here most of us who are here that I can think of, I know we have background knowledge about the market, or we have the basis of the market. Okay. So for me to start the analysis or go on the chart, I would want to list a few things that I want to use as guiding principles. So things that will guide me to be able to go into the analysis. So one, I want to look for um, daily and weekly bias. Guys, can you all see my screen? Can you all see my screen?
Yes, I can see. Guiding principle.
Perfect. Thank you. So I'll be looking for daily and weekly bias. So the daily and weekly bias is going to form my context or foundation that is going to show me whether I should be looking for bearishness or I should be looking for bullishness. And following the daily bias or weekly bias, I'm going to, inside of that, it will be like doing a top-down analysis, something like that. So, but within that, I'm going to look at my dealing range. So, what dealing range means is what is the most important or crucial or current range from the daily or weekly time frame perspective that is relevant to me as a trader, or as is relevant to the type of trading I want to do. So because most of us are intraday traders, we want to scalp, or probably want to get 30 pips, 50 pips, 100 pips, and then we are out. So we want to look at the dealing range. And inside of the dealing range, I want to look at my swing highs, the most current swing highs, and swing lows in my dealing range. Then from there, I will use my Fibonacci to check within the dealing range or the swing high and swing lows. Is there any retracement or pullbacks? Am I going to look for continuation, or am I looking for reversal? So I'm okay trading continuation and reversals. So I'm going to use the fib to help me look at if there is any possible pullback or if I'm going to um, see reversals and then predict or try to see if I could target buying a pullback or selling a pullback on the pair that I'll be looking at. So I'll be using the fib to help me measure the movement within the swing highs and the swing lows that I will identify. Um, so someone is trying to join. So let me see. Let me add them right now quickly. Mhm. Okay, I think the person is gone again. Okay, perfect. So then after doing that, how am I going to get my entry? So I'm going to look for change of character and break of structure, BOS. Change of character and then BOS. So within that, I'm going to look for any imbalances into bracket liquidity, or if there is any liquidity that should be taken out before price goes into the direction that I want it to go to, or um, something like FVG, like a fair value gap. So these are the things I'm going to look at. And then from there, I'm going to see if it's viable for me to take a trade. So let's get to the chart. Does anyone has any question with these few guiding principles that I'm going to use? Mhm. Any question? Great. So if you are okay with it, just say, yeah, we are good. Or yeah, let me know that we are good so that we can roll it.
Yeah, yeah, I'm good. I'm good.
Perfect. So so let's start with the volatilities. Let's start with um this is 51S for me. So I'm going to go straight to the daily time frame on 51S. Daily time frame on 51S. I'm going to the daily time frame. So as we know, we those who have been trading already, or probably we those. mm, uh, so let me take a screenshot of the guiding principles.
Yeah, Kevin, I got up a bit.
Mhm.
I've seen IFB. Can you throw a little light on it for us? For
Oh,
me,
sorry. That's the fib. It's a mistake. Yeah, it's a typing error. Like, I mean the Fibonacci 2, FIB. Okay,
okay.
great. Yeah, thanks. Um, so do you guys still see my chart? Do you guys see my
Clearly,
chart?
very well.
Okay, perfect. So this derive chart doesn't show the full activity on the daily time frame, because if I view on my
I cannot see the chart. I cannot see the chart. I can only see the whiteboard.
yeah, okay. Okay, so are you able to see chart now?
I'm not seeing the we are just seeing your face now.
Okay. Are we seeing chart now?
Yes.
Oliver, are we seeing chart?
Perfect.
Perfect. Okay, great. Are we all good? Salim, Bernard, everyone? Are we all
Yeah,
good?
yeah.
Great. Okay. So okay, good. So I talked about dealing range. So first I said we should look forward the daily or weekly bias. So this chart is giving me only the daily time frame. I'm not getting weekly time frame with this derivative trading view. And also it doesn't give me the history at the top. On my phone, I could see the history that price is up and then it dropped down to this low and then it makes its way into this area, retrace, drop down back, made its way here, drop down, made its way here, and it's dropping again. So this is the information we have right now. So, and that's enough for us to really look at what we are dealing with. So for me, what do we think is the trend right now? So, what is the bias right now for this week or for today? What is the bias? So, I think this is today's candle. So, today's candle opened or started somewhere here, okay, and then has been moving up to here. Today hasn't closed yet. It's left with about 4 hours for today's candle to close. Great. So, and then yesterday's candle started from here, so meaning that this week it started from here. This weekly candle started from somewhere here. Okay, somewhere here. Makes a high and then makes a low. Yesterday, high, retrace, and then pushed down. Great. But from the top, this whole leg swing, this whole swing, okay, is this whole swing is um, what we can use as the range or the leg that we are dealing with. So this is the relevant information that we can use if we want to be intraday traders or we want to find some entries on a smaller time frame and trade. This is the range that we can, or the information, the data that we can use. So within this data, I can say that price is bearish. Price is bearish. What do you think, guys? Is 51s bearish? Is it
Yes.
bearish? Great.
Yes, it.
Perfect. Bearish. But the question is, where is this price going? Where is it gravitating to? Where is it drawing to? Where is it likely to end? Where is it going? And is there any indication right now that price will want to go bullish? I do not find any indication right now based on the daily time frame. I don't find any indication right now that price will want to go bullish. So let's start with I don't find any indication that price will want to go bullish. So which means we are bearish. But before we do any other thing, um, so let's look at before price started going bearish, what happened? What was the context around price deciding to go bearish? So one, I could see that there was this previous swing high here, this area, previous swing high here, that price pushed up to take out. Okay, it pushed out to take this previous swing high. So this swing high has been invalidated. Then price pushed down. We saw this price moved up and then pushed down, and then we saw price engulfed, like this daily candle engulfed this um, candle. So this pattern is also giving us a new swing high. So what makes up a swing high? Okay, swing high. For a swing high, you have to have three candles to determine a swing high. Okay, so what did I say? Three candles. One candle should mostly, it could be three, it could be four. Please mute, please mute, please mute, please mute. When you join, please mute, please mute. As soon as you join, please mute. Okay.
Yeah, biscuit. Yeah,
Please, when you
continue.
join, mute. When you join, just mute, please. If you know there is noise in your background, please mute. Okay. So so we have this swing high, which is this big green candle, which is a bullish daily candle. The shadow, the wick, not the body. Okay, because if you go on 4 hour, the wick will become like a candle, or 1 hour, the wick will become a candle. So we have a high. This give us a high. Okay, then we have a higher high. A higher high means that another candle that pushed up that is higher than this previous high. Then the next or the third candle give us a high that is low. It's still at the top, but this red candle, but it's a lower high. So that is what I will be looking for, or you have to be looking for. So first, for you to get a swing high on a daily time frame, you need three group of candles. It could be four, but you need three group of candles mostly. One should give you a high, the second one should give you a higher high, and the third one will give you a lower high. Once you see this group of candles form, and then the third candle that gave the lower high pushed down to engulf or close below the second candle that has the higher high, the body of it, once it closes below it like this one closed here, this one closed here, this candle closed here. Once it closed here, we are done. That is a perfect confirmation that price will want to reverse. Price will want to go bearish. Okay, that's a confirmation, especially when it has taken an old or previous swing high. It has invalidated it. It has swept it. It has taken it out. Then we want to say that, okay, there is an indication that price will want to change its state of delivery and then give us what? A bearish movement. So right from here, so if you are the trader of me, with this knowledge, all you have to be doing, this is one full day, a whole day. This is a second day. This is a third. So you have to wait 3 days to after a high, an old high is taken out, swing high is taken out on a daily time frame. You have to wait like 2 or 3 days to see if this something like this will happen. Once it happens, then you will be confident that if you are trading bearish, you are likely to succeed. Okay, you are likely to succeed. So, one, what did I say? You have to look at a previous high and look if the current price leg or swing high took it out. If the current swing high has taken it out, then you look for a swing high pattern that will be formed, and that will give us a reversal. In candlestick pattern names, Oliver, what type of candlestick pattern is this? Anybody
This
tell
evening
me
star.
what candlestick pattern is this?
In this evening star.
Okay.
Evening star, evening star.
Perfect. So you see, I am not mentioning evening star, but the concept that I am using is also has a confirmation that gives that former name as an evening star candlestick pattern. Okay, so on the higher time frame, how do you know structure is broken? What I have observed is that the body or the low of the first candle that gave the high before it was taken out with the higher high, once that the body of that candle has been taken out, once the body or the low of that candle is taken out, most times that is what I've backtested and I've seen. Once it has been taken out, that determines or that shows a break of structure on the daily or higher time frame. So, and once there is that change of state of delivery or break of structure, it will be very hard for price to go up or stop you out. Because if you are taking an entry from here, then your stop loss is going to be above here. Okay. So once that happens, it's going to be very hard. But until that happens, this fourth candle most times is likely to move up to retest the high or the body of this third candle here. So if you take your entry here, you might be in a loss for a whole day before market pushes down. Sometimes the fourth candle does that, and sometimes the fourth candle will not do that. Okay, so these are things that you will learn or you will know by experience. Great. So let's continue with the idea. So once we have seen that on the daily time frame there is change of character or there is break of structure, what do you do? Or what right on the second candle here? So let me put a line here on this candle, the engulfing candle, and then let me move to from daily time frame. You move to 4 hour. So from your daily time frame, you move to your 4 hour time frame. So those who are beginners, you will not understand. Saturday, next week, we have the class for those who are beginners. So we'll teach you everything from scratch so that you'll be able to understand. This is for those who already have the knowledge. Okay. So, but it's good for you to follow, for you to ask questions. At least we could answer some of them before you get the basis from the scratch. So this is where the line is from the daily time frame. So from here, the low I could see is around here, and then the high that we had was around here. So this gives you a range. Okay, this gives you a range. Okay, so within this range, this gives you a range. Within this range, you can now fall into 1 hour or 30 minutes or 15 minutes. So let's go to 1 hour time frame. So on the 1 hour time frame, this is how it looks. Okay, this is how it looks. So most of us will not take the trade on 1 hour, but we'll take the trade maybe on 15 minutes. So let's still move to 15 minutes. On 15 minutes, because now we have had confirmation of a change of character. So let's go to 15 minutes. So on the 15-minute time frame, this is how that area looks like. So I have a range, a low here, and I have a high here. So I will take my Fibonacci and measure from this low or from that high to the high. So when price was dropping, we assume that price had already hit this area. Okay. By the time you are measuring, price had hit this area. Okay. So price hitting this zone is when you are measuring this, because that is when you got the confirmation. So when price hits here, we will call this area like a support zone. So you can see that price closes below the support zone, okay, and then quickly pushes up into the support zone. So that gives you an indication. If you enter the trade here, it will fake going down, and then it moves up into this area. Then from this area, it moved down and then retraced, doesn't take this high out, and then started going down and never came up again. So what you do is that what you are going to do is that price closing below this low here tells you that there is a higher likelihood that we are going to go bearish. But then there is definitely going to be a retracement after every BOS, every break of structure, there's going to be a retracement. So on the Fibonacci, this time, this one gave us, so let me draw from the top rather, because we had the swing from the top. So this is a tool on TradingView that you can use. Good. So it gave us a 38% retracement. It didn't give us equilibrium 50%. It's just close to 50%. Okay. It just gave us 38%. Okay. But sometimes price will want to push up to 61% or 78%. Okay, into like the premium zone, so that you can buy, you can sell. But it just gave us below equilibrium, below 50%. And I can say that that would be because there was a previous swing, a previous high here on the 15 minute that broke structure. So it just retested the low of that. Okay, and that if you measure that, you could see that it pushed up 61.8%, which is an entry, like a good or a perfect area for you to enter your trade. But at this point, we were not having the confirmation on the daily time frame. So you have to wait, because you want to have a very high probability setup. So you have to wait. But it is at this point that we got the confirmation on the higher time frame. Okay. So from this point, price pull, you have to wait for any pullback. The pullback could come to 23%, 38%, but mostly equilibrium. But you might not also get it perfect. But any area here, wherever price comes to, preferably in the premium zone, you can just find your sell entry or take your sells, and then you go. And your stop loss is going to be, your stop loss is at what point are you accepting that you are wrong? That is your stop loss. So your stop loss is normally going to be the high here or this high. And if price is to continue pushing up, if prices continue pushing up to break up this area, then you know this setup has been invalidated. You are wrong. Okay. So this is the process that I will go through, or you can go through, to find a setup. Please, who is that? This is the setup that you can this is how you can find a setup on the daily time frame. Okay, you can find the setup from the daily time frame, right from the daily time frame, 24 hours. Okay, using the concept of swing high. So from this area, we know that we want to go bearish. So until there is a new swing low pattern that will be formed somewhere here, price is going to continue going bearish. And the question we have to ask ourselves as traders is, where is it going to? So if price took out this swing high and is dropping, and is now dropping to the downside, then I think it's going to target all swing lows. So there was a swing low here, price already swept it out. Okay, taking it out. So any swing low, you have to look at it. There is another swing low here. So notice that this candle here, we have a low. This red candle gives us a low. This bullish or green candle gives us a lower low. This red candle give us a lower high. Okay, the wicks. Okay, it gives us a lower high. These three candles on a row forms a swing low. Okay, so on the fourth candle, you can take your buy, your entry. Okay, so if we want to also backtest this area, we could see that from the high of this candle to the low of this candle, before the fourth candle took off and started moving up, we could backtest to see at what level on the Fibonacci did it retrace or pull back. So let's go straight to 15 minutes. Okay, let's go straight because it is the 15 minutes that we will monitor or take our entry from. So let's go straight to the 15 minutes. Good. So on the 15 minutes, this is the area. Okay, on the 15 minutes, this is the area. So this is that area. You can say the area is somewhere here. But so from this low to this high, market pull back into equilibrium or 61.